to be here on the next day. It's our third day of life with this live class. Welcome back for another this episode. I would like to welcome everyone from any corner of the world. I'm really so gladful. So today we are going to diving in and show you a step-by-step process how you will be scalping VIX 75 by using our strategy, which is a WtB scalping strategy. Quick recap. Yesterday I showed you guys how the market will react and then how you can trade around this area after identifying this monthly zone, and you see the day how it moved very well, what we expect, and the market it what it did. So now today I'm going to show you another scalping strategy that you will be using on a daily basis so that you can be profitable with this volatility 75 index. So what you have to do, drop a comment there where are you watching this live from. So and another share this live, say guys, say live, say live, say live. Let us share this live to everybody. Just say live to everybody. I need some good people here so that we can continue. Make sure say the live, say the live, say the live, and then we start. Yeah, drop a live comment there where you are watching from, your name, your place where you're watching this live from. Yeah. If you have any question, you can also drop it there in the live comment, and then we can see just in the chat. Yes, chat are open. Drop any question there. Drop your question in the chat. Yes, if you are new to our Trader Dive YouTube channel, go on and hit that subscribe button so that you don't miss the another coming lessons. So this is a series of the lessons I'm going to be sharing with you guys on a daily basis. Guys, share the live, share the live, share the live, share the lives, and we go. Yes, I need some good people here so that we can start. I don't want anyone to miss. We go. Share the live, share the live, share the lives, guys. I'm waiting some good people here to join so that we can all move at once. Are you getting the point? And go in the chat there, drop where you watching this live from, and drop your name. If you're new, make sure to hit that subscribe button so you don't need to miss the series of these live classes with me. And don't hesitate, go there and join my free Telegram group where I always drop free signals there. Yes. Yeah, and in the description we got a good offers there. You can grab our free ebook there. You can make an order for our PDF and ebook guide, so they will help you to trade the market very well. Yes. Say the live, guys. Say the live, say the live, say the live, and we learn together. I don't want anyone to miss. So those who are still in the way, who are still preparing themselves, they will find us in a way. So what we have to do, grab a pen and a paper, and then you will be noting each and everything what we are going to be talking about. So first, number one, when you always come to the chart, you have to start to the higher time frame. you have to start to the higher time frame and you identify the overall trend. So we have three types of the market trend. We have three types of the market trend. We have the uptrend, we have the downtrend, and we have the sideways trend. Those are the three types of the trend which we have in the market. So when to trade and when to not trade. We always trade when the market is moving upward, or we trade when the market is moving downward. We can also trade when the market is going sideways, but it needs and it lacks a lot of information and a lot of experience. I explained this yesterday also. So I highly recommend never interact the market when it is moving on the sideways trend. How to identify a sideways trend? We identify a sideways trend when the market is making the equal highs and the equal lows. Are you getting the point? The market can be doing like that, but when it breaks this high, it comes down. When it breaks this low, it goes up. So we call all of this, it is what I said, with trend. So we can identify the uptrend when the market, we know it always move, making the high highs and higher lows. And when it goes down, it makes the lower lows and the lower highs as well. The way how you can see here exactly how the market is behaving. Are you getting the point? So if we can see that the market, it has been making the high, low, and the high highs. No, sorry, this is the lower highs and the lower lows. What call a downtrend. So here, this side, if we can come back to the left like this, we can see exactly that the market, it is have been making the high highs here like that, and then and the higher lows. These are the high highs and these downwards are the higher lows. Those are the two big trends which we always to join in, and then we do what? And we cultivate in the market. So remember, when to trade, when to not trade. We trade when the market is doing something like this. When the market is making the high here is when we trade. When the market is coming to make a low, we don't trade. The market when is moving high is when we trade, which means if the market here is when we look the entry, we look the patterns, what we know, we use any kind of the strategy which we learn or which we mastered to enter in the market, and we catch this move before it happens. Are you getting the point? This is when we trade. We don't trade when the market it have reached on its top like this. We don't trade around this area. We don't trade around this area. Are you getting the point? We trade in the middle of this range. So when do we trade? We trade when the market pulls back here, and then we find exactly where to enter, and we continue with the market, what we call a continuation market. So the easy way how to identify it, you can see the market making the high, make low, make the high. We got a break structure, or you can call a change of character. Because this will be a moving down, and then here we have a change of character, the move pull up in a low time frame, and then the higher time frame it will be a B O S, a break of structure, and then we come back to make a retest, which means this will, here we don't need to trade, here we don't need to trade, we have to trade around this area. When the market comes back down is when we start looking the confirmations, and then we go upward like that. If this phase, we wait the market to shift from the uptrend to the downtrend until it breaks this structure down here. After it breaks that structure, we come back, and then we find the opportunity here, and then we continue to go down. That is when we trade and when we don't trade. Always follow that. Follow the market, what it tells you when you come to the chart. Never just use your eyes like that and then you say, now it goes up, let me jumping in. No, you don't need to see that the market it have reached here on its top and then you want to keep buying. Unfortunately, it will be the zone like this here. You getting that point? Now, for instance, now the market is approaching this zone. You think that it will continue to buy, and then you jumping in, they bring you down. No, you wait to see until when the market it have reached on its top, comes back in the middle to show you that it has changed from the downtrend and then to the uptrend, and then you find the confirmations. You continue like that. When to trade and not when not to trade, I have explained it to you. Just this was a mind boost, or a little bit of psychology of the market, or of the strategy, or psychology of the structures. Are you getting the point? So that you can understand when to intervene in the price, how to deal with the structures. So let us go to the strategy, how it works. Yes, rule number one, you have to come to H1. Always come to the H1 is the main high time frame of this strategy. You have to identify the trend. I told you this strategy works in two trends. It does not work in it does not work in ranging market. It works when it goes up, or it works when we are going down. It is when it works. So when you reach in H1, you have to identify the high highs or higher lows, or to find the lower lows and lower highs. Those are the two things where you have to identify in H1. When after identifying those two things in H1, we diving into the low time frame. So H1, these high highs and higher lows, they will give us a bias. They will give us a trend bias, which means we have to follow our high time frame, which is H1, to continue trading with it, not to trade against it. If the H1 is going up, we have to go to the low time frame, and then we trade when it going up. So let us say the H1 is moving upward, making the high highs and the higher lows. This is our H1. So we have to diving into minute 5. Minute 5, which means when the market here in H1 make a high and made a low, minute 5 will be making the higher highs and comes making the lower lows and the lower highs. So when the H1 comes like this down, the minute 5 will be making the lower lows and the lower highs like this. So it's when we look here the setup, and then we continue to go up. So by trading with the trend of H1, we have to wait to see that the M5 has changed its direction from the downtrend to the uptrend to align with the higher time frame of H1. I got to have got that very well, and you have understood how to deal with that. Getting the point? If you have any question before we move further, make sure to drop it on the on chat, so that we can answer you immediately. Yes. Share the live, guys. Share this live. Everybody will learn. So let us go to this charts. Now we have here our high time frame. This is daily. We don't need to use the daily with this WtB BS scalping strategy. We have to start with the H1 as our high time frame. So let us go to the H1 and we see what's the H1 it is presenting for us. Now, when you reach on the chart, the H1, we can see now it's riding exactly what we are wanting. We can see that the H1 now, it have been moving the downwards, making the lower lows. Here we have a little bit ranging market, and we start making the high and the low and the high. So the bias of the H1 is bullish. That's all. That is what we need. The bias of H1, it is bullish. After identifying this bias that we are going up, and now we have to get our tools. Those are the trend lines. We are going to connect this area, and you connect that. We connect this one and that to get a trend channel, so that we will be trading with this momentum until the market shifts from that, comes back down, and then we shift, we come to this side. So let us draw this trending channel, and we see how it is. Are you getting the point, guys? Like that. We have to get our tool here. I have zoomed too much. Some of you might not see it. I think, guys, everyone can see the chart. So this is our movement in upward of H1. Are you getting the point? Let me delete these zones of yesterday. So we have to get our trend line like this. We connect this low here, and we are going to connect also this up here like that. So we are done, and then we have to duplicate this, to clone it very well, and we get another line, we put it upward like that. Are you getting the point? So it's supposed to touch here so that we can get exactly to see that our trend, it does not be this be disturbing us. So now this is our trend, which means we have to look for the buys only. We look for the buys opportunities only. So the next step, what we have to do, we're diving in after we have already identified our overall trend in H1, that is uptrend. Now we go directly to minute 5. Right, now we are in minute 5. So when to trade, we trade when the minute 5 is exactly aligning with H1, and when you find there are some candles which are coming out or which are trying to be outside of your line, what you have to do, you make adjustment of your line, trend line, like this. You put them exactly at the wick like that, and then you see if they don't cut our trend channel. Are you getting the point? Our trend channel, it has not to be supposed to cut or to be far like that. So we have to wait the market shifts from the low and to the up. Now this is good example here which we are going to use, So if we can see here very well that H1 moved from downward to the upward, and minute 5 moving from downwards. When it was moving downwards, it's when we look it. And we wait also to shift. So that is what we do. This is our good example here, which is on the screen, and that is what I'm going to use. You can see here very well that minute 5 was making the lower lows and the lower highs. Are you getting the point? So we wait this to happen. When the market, when minute 5 do that, we wait a shift from the sell bias to the buy bias in minute 5. So we have to wait here a shift. Are you getting the point? Or a break of this structure. Are you getting the point? And then we catch when the market breaks and made a retest. We entered here, and then we target this high here. That's what we have to do. Very easy. There are two ways which I'm going to give you that will help you to catch the market in exactly way. So the type number 1, what we have to use. These are the entry type. Are you getting the point? I showed you how to identify the pattern. After identifying the pattern, and then we jumping in. We only need one thing, that the price should be, the M5 should be moving downwards, like making lower lows and lower highs. This is an example I'm repeating. We wait the market to shift from the sell bias to buy bias. Are you getting the point? How to identify that now the market, it have moved from the sell, now we are ready to go to the upwards. You can see it here very well. It's good explaining itself here. You can see it very well. That when here the market moved, made a low, we made a high, we made a low. This becomes our liquidity sweep. Because this was a low, we swept it, and then we comes back, we closed inside. And this leg to go down, it creates here a lower high. Are you getting the point? And the market takes this off. After taking that off, here we had a resistance, which was retested. When the market moved down, comes back up, we retested this. It becomes what? A resistance. We come back down, we swept this, we come and we closed inside. And this terms as what? A liquidity sweep, and then leads after liquidity sweep, we get what we call a double top, a double bottom, not a double tops. We got here a double what? A double bottom. After getting these double bottoms, now it is a sign, like yesterday I explained to you, when this market was changing in H4, we got a triple bottom. Now here in minute 5, another example, it is the same. It is a sign that the market, it will shift from the direction to another direction. Now here we have two touches, almost there, three. This is one here, and 2 and 3. You can see this is 1 which was faked out, and then this is 2 and this is 3, and then it is a zone here which was acting as a resistance, and then we come above, below, we break it, and it becomes a support. Are you getting my point? So this, after this happening, that tells you that now the market, it have start moving. So we don't need to rush to jumping in. You have to wait. Are you getting the point? This is how you can see the market is shifting. Now it's time to look for the entry. These are the entry criteria. These are the things where you have to look them. If we don't see them, don't execute in the market. Are you getting the point? So what we have to do here, is one thing. We get our zone. Are you getting the point? We mark this level here like this. This is our good level here. We mark it like that. After marking, we wait to see the reaction, what market it will does. You can see that there is another pattern here, very easy. You can use it, you can implement it without mixing things or complicating things. It be easy. So when you see price making the lower lows and lower highs in minute 15, the easy way, what you have to do, get the trend line, draw your trend line like that. Are you getting the point? Draw the trend line like this, connect this high, connect this high, connect and this high, like that. You wait the market to break that. When it breaks, you find to see the last lower low. When the market broke, you can see we had this low here, we had this low here, we had this low. Are you getting the point? So you can also highlight this low here, you highlight this low here, you highlight this low here. So we have one low, we have two low, we have three lows. We drew our trend line, this area. After drawing that, our trend line, we wait the market to break. If the market, it will not going down, it will not going up, it will not break these areas. It will respect them, fake out on the trend line, and then it comes close. Inside the trend line, we break the overall trend. Instead of continuing going up, we're going down. So when you see that, you draw your trend line, you wait the market to present a pattern, what we call a head and shoulder. This pattern, it always be like this. The market can be making a high here, it makes a low, it makes a high. After making a high, it makes low here. When it makes a low, it breaks structure. After breaking structure, it comes back to make a retest. Are you getting the point? It make a retest. It does not make a retest to the structure retest, but it make a retest to the invalidated structure, or what we can call invalidation X. Are you getting straight? Which means this is a structure which was invalidated or which was disrespected. Are you getting the point? So you wait the market to come and retest this structure which was invalidated. Are you getting the point? So this creates a head and shoulder. This becomes a head, this becomes a shoulder, and this becomes a shoulder. Are you getting the point? And the market continuing down. So this is what happened here. So we have two patterns. It's one pattern, but we say two. When it's looking like this, when the pattern looks like this, high, low, high, low, like that. Here we have a break structure. It can be at the same area, or maybe it breaks like that. Are you getting the point? Also, this becomes a neck. So when we have this, it becomes what? A head and shoulder. And when we have this one, what you see here right now, becomes an inverted head and shoulder. Are you getting the point? I think you have seen now. So these are the entry criteria. Now this part, it have not yet happened. Let us say it have not yet happened. How could you catch this? How could you implement this strategy to catch this? The step number one, I showed you to identify the overall trend. The step number two, to see that the market, the M5 start aligning with the same direction of the H1. If the market is going down, which means it will be making the lower lows and lower highs in high time frame, that is H1, we will be looking for the sales. If it goes up right now, that's why I'm showing you the setup for the buys. Simple and easy peasy strategy. Are you getting the point? Now we have two key levels that the market which did what? Respected very well, and sold the little what? Head and shoulder, and the big one, head and shoulder. Let me use the trend line here to show you very well. So we have another structure here that what was being retested. Now, do you see this structure here like that? If we highlight very well like this, you can see that also the market respected it, and then it made what? A head and shoulder. So you might say that it's not a head and shoulder, but it is. There's not always going to be like exactly how you think that they will be. This breed, you want to disturb me. They will not be exactly look the way how you think that they will be, like this, and you always see that. So you have to see exactly how head and shoulders forms. This can be one, and another one could be like this. Are you getting the point? That is also it is, and another one could be like this one, could be like this. That also could be a head and shoulder, because this is a high, this is a low, and this is a lower low. You can see. Are you getting the point? Also, the neckline can change. So if you bring the head down here, what's happened around here, you can see here we have this low, we have this low, and we have this one, which means it is like this. Do you see? Like that. So it's not aligning at the same as like this one. See that it is presentable very well. Are you getting the point? So to identify it very well, you can use the trend line. Also, you mark it like this. You mark it like this. You can get this low here, you get this high, and you connect them. You wait the price to come and retest without breaking it. That is horizontal line. I need this one. I need a trend line. Connect this here low. You connect this neckline or this structure like that, and then we take it in the future like this. And you can see that the price very well come and retested that. So after the market respecting or testing, or after you getting to see, after you see the pattern, what you have to do, it's the time to jumping in. Are you getting the point? When do you jumping in? We jump by using the confirmations candlesticks. Are you getting the point? So the confirmation candlesticks pattern, you can see here we had a push up, and then we come down, and then we respected this area here. After respecting it, and then we had to move upward this area after respecting it, and then we have here a candlestick pattern that gives us this move. Are you getting the point? We come back, we made a big inverted head and shoulder. We got here a bullish engulfing pattern, and then we execute, and then we take the market up. Are you getting the point? So that is how we use this WtB scalping strategy. That's how it works. So if you have any question, drop it to the chat there. Drop it to the chat, and then I answer you. Make sure to go in the description below there and you join our free signal Telegram group, so that you don't need to miss our daily profitable signals. So, and if you want to join our mentorship program, also contact us through the contact informations there. And make sure to be very careful. Use the only links which are provided here to join our VIP, to join our free offers. To use only the links which are provided here in YouTube. Make sure to know that in your mind, anything will happen to you, that people, they will try to do what? To scam you through our names. So always confirm 2 times before you buy any product of ours or you invest with us. Make sure you're talking to the right people, right person at the real time, and then you confirm it that this is WtB, and then you do your purchases. So guys, I want to see your questions. Guys. I want to see your questions. I don't see any question here. I don't see any question. Any no question, guys? Getting point. I don't see any questions here. All right, as well, I don't see any questions, so let me go to the risk to reward of this strategy. So how do you risk and how do you target? Are you getting the point? So this is an example which we are using here. The most times what you have to do, you have to use the trend line so that you can identify this very easy, and it will be faster for you to identify this setup. Are you getting the point? Let me do like this, and we use our trend line here. So when we get this trend line, we have to mark this high, and we pull our trend line downwards like this. Are you getting the point? And we wait the market to break our trend line. So after market breaking our trend line like that, we wait to confirm that the structures what we have got this side, the structures that we got around this side are retested. If those structures get retested, and then we confirm them when we see the price rejecting. Now when the price comes, this is our structure here from the left, the price comes, breaks out the trend line, come back, retest this structure, which is this one or this one. So after this market price reaching, we have to identify the candles or the behavior of the price, how candle performs. We want to see rejection 1, rejection 2, rejection 3, or any candlesticks pattern. Go and study the candlesticks pattern. There are a lot of videos across the YouTube. They will teach you the best candlestick patterns. That why me, I want to give you that are working good. There is morning star and bullish engulfing. There is hanging man and inverted hammer or hammer. Those candles, they are the one which are working best with this scalping strategy that I'm teaching you. All right, so what you have to do after identifying that, now you confirming that we have got the one of those candlestick patterns, what you have to do, it's your time to execute. When you execute, what you have to do like this, you wait the minute 5 close and presenting shows you the best entry you entered. This is what I'm meaning here. Are you getting the point? This is going to be our entering point after seeing how, after identifying this bullish engulfing. Are you getting the point? We have already identified immediately when the candle close it, and then we execute. This is going to be our entry point. So leverage, it will depends how much account big it is. If you are below $1,000, make sure you use the lot size which is going with that. The first lot size to go with, if you have $200 come down, it is 0,001. That is the lot size, the first lot size. $100, $200, that is the lot size. The number of entry, which means that is one entry. Now, risk to reward, you have to calculate before you execute. If I'm using, I have $200. This is the setup. If I enter here with 1001 lot size, one entry, from this area to this area below where we are going to put the stop loss, because the stop loss is supposed to be below of this candle or below of this structure. After getting our bullish engulfing, we execute. The down here candle is where we put the stop loss, but we have to give it the space and we leave it the market to breathe, which means we will add 5 pips or 10 pips from exactly where the stop loss is supposed to be. We add some space. So you have to calculate here. If I enter here, from here to here down, how many money I'm going to lose? $5. Okay. If I'm losing $5 with one entry and I have a $200 account, which means I'm losing $5. Now, how many entries should I enter? Yes, I have to lose $20, which means if from here to here are $5, I'm going to one entry, which means I have to put 4 entries, which will be equal to $20. I think you have got. Now that is the risk. We have risk of one entry, $5, and we are losing 10% of our $200 account. So if one entry here is $5, which means to lose 10% of our overall account, which means we are going to enter $5 times 4, which means are giving us 4 entry here, and then we execute. That is the risk. So we have to come and then we calculate the reward. If we are losing, here is our stop loss, we are losing $5, which means what is the gain? We are going to gain 2 times of the money which we are risking. If we are losing $5, we have to make $10 in profit, which means we have to target $10 in profit. Are you getting the point? So if we are losing $20 times 2, we have to make $40 in profit. That is the risky to reward ratio. And this strategy, you have to be patient. You wait everything that have already shown you to happen. If anything does not happen, don't execute. Don't take the trade. If anything does not present yourself, always wait the market to come to you, not you to go to the market. That is one thing. Are you getting the point? We have done with the risky to reward ratio. Now we are going to the entry management. Are you getting the point? So how do you manage? You have to be here, looking very well. After entering, now the price is moving to your side. Are you getting the point? When the price move from your entry, it move exactly the same distance of your entry to the loss, and you get it here. From your entry to the price where it have moved, you see you have already $20. You have been going to lose $20. You have already in profit to $20. Now what you have to do to move your stop loss from here to little bit 1 pips above your entries. That's what we call risk-free trade. Above 1 pip of your entry, when the market comes, that's what we call a break even. It will hit you on a break even. You will not make money, you will not lose money. That will be a break even trade. When you see $20 in profit, if you feel that you can't control it, you can close some entries. If you see you have $20 in profit, you have been losing $20 in profit, you can close $10. You close 2 entries with $10. Are you getting the point? Now you remain with $10 which are running, and you be on a break even. You leave them entry to run and hit your TP. Instead of making $40, which means you are going to make 1.5. Are you getting the point? You're going to make 1.5. So that is the trade, how you can manage it. If the trade come and against you, hit you at the break even, but which means you have not lost anything, but you have gained something. You were going to lose $20, but when the market reached on $20, that's 1-to-1, you move your stop loss to break even and you close $10. You left $10 running and the market come hit you at the break even, which means you are up $10. That is how you should be managing your trade after executing, right? So if we go to see after executing how the market behaved, you can see it moved all the way up. So another tip, you keep tracking the price. You keep tracking the price and you see the behavior, how it works. Now we have another zone here. You can see here when the price after break this area and this area, we executed here. The price moved up, come back again, and then gives you another signal that goes up. You also jumping in for the second time after see the confirmations that going up, you execute. Stop loss below of this structure, which is retested. Also you target 1 to 2, like that. That's what we call scale in. Are you getting the point? Now you have scaled in. You have entry 1 and you have got entry 2. Until you see the overall TP is hit. This is our overall TP. If this does not happen, or if this happens after your overall TP here got hit, what you have to do, you don't scale in for the next time. You leave. You have to go back and make another analysis in higher time frame. But if it have just come, made you the pattern here, execute, comes back, retest this here, and then gives you the best candlestick patterns around that area, you have to execute here for the second time, and then you continue to go upward with the first entries and the second entries, like that. Thanks so much for being with this live. If you have not yet subscribed, go on and hit that subscribe button. Turn the notification bell so that you don't need to miss the next live classes. And if you want me to mentor you, make sure you use those links which are in the description below, which are those in what chats there, to go direct to our free signal group. Then you will get access there to communicate with me and to talk with me. If you are watching the replay, yes, just drop down the replay there. I will answer you. Yes, that is the only thing what I have for you today. See you. Much love. Make sure to put things in action. Practice. Now you have learned today. Focus on exactly this trade, this strategy. Are you getting the point? We are still dropping many strategies and many classes. So choose one strategy which is best for you, which is fitting with your heart. Are you getting the point? What makes you feel comfortable, which will give you an edge. Are you getting the point? This good strategy gives you edge, shows you where to enter, when to exit the market. That is the best strategy. Not always strategy will not take you to the drawdown, will not take you to the loss. It will take you to the loss and it will make you to the profit. Only one thing, you have to master it. All right. See you to the to the next episode, man. Next live. God bless. Much love.